Students, today we will learn what are business documents, how to record transactions and books of original entry or journals, and how to record transaction into ledgers. I have often observed students are always confused in differentiating between journals and ledgers. In this video, we will try to learn the difference of journal and ledger and how to record transaction in journals and ledgers. Students, there are different types of transactions. Some transactions involve cash received or paid, checks received or paid. They are recorded in cash book. Some transactions involve credit purchase of goods. Credit purchase of goods are recorded in purchases journal. Credit sale of goods are recorded in sales journal. Similarly, different types of transactions are recorded in different types of journals. Before recording any transaction, we need to have a documentary evidence of that transaction that is known as a business document. So before recording, we need an evidence that is known as business document. Then we will select one of the 6 journals to record our transactions. So in the second step, we will choose a journal to record a transaction, and then we will record a transaction in that journal. And third step is to record the transaction, to post the transaction from journal to ledger. Now we will learn how to record a credit sale of goods. For example, if we want to sell goods on credit to Farhan, $560. So first of all, we need a business document. If we want to sell goods on credit, we need to prepare an invoice. What is an invoice? It is prepared when goods are sold on credit. It is issued by the seller. It is actually a demand for payment. So here is the sample of invoice. We are Jmart. This is our detail. We are selling goods on credit to Farhan, and these are the other details of the customer. And these are the details of the goods to be sold to the customers: their quantity, their per unit price, their total price, and 560 is the total amount due to Farhan. So document is prepared. Now we will record this transaction. So credit sale of goods are recorded in sales journal. Now this is the format of sales journal. We will write here date, we will write name of the customer, and we will write amount. Students, do not write anything else, just write the name of customer. For example, students often write sold goods to Farhan, so this will lead to deduction of marks. Don't write anything here. Now this was the second part. It is complete. First document, that was invoice. Then to record a transaction in the sales journal, we have already recorded. And the third step is to post the transaction into concerned ledgers. Students, you already know every transaction is recorded in 2 different accounts. Goods sold to Farhan will involve 2 T accounts. One Farhan's account and the other is sales account. Farhan's account will be debited and sales account will be credited. Now we will record this transaction into 2 T accounts. This is Farhan's T accounts, we have recorded on the debit side, and this is sales T account, we have recorded this transaction on the credit side. Now When a transaction is recorded in two different T accounts, one is debited and the other is credited, that means double entry is completed. Students, you might have noticed in MCQ sometimes number of options are given, 4 options are given, and you are asked to identify in which option double entry is completed. So when transaction is recorded in two different T accounts, when one account is debited and the other is credited, double entry is completed. So 3 steps are completed. Invoice was prepared in the first step, then transaction was recorded in the journal, and now it is posted to the ledger. Now we will learn the next transaction. If goods are returned to us by the customer, so this will be known as return inwards. First of all, its document will be prepared, then it will be recorded in the sales journal, then it will be posted to the concerned ledgers. So previously we sold goods to Farhan on 1st November, that has already been recorded. In the second transaction, goods are returned to us by Farhan $50. Now the business document, there are 2 documents that are involved. First, customer will request the seller to return the goods, that is known as debit note. This request will not be recorded by any of the parties, and parties here means seller and customer. Because this is just required, this might be approved by the seller or might not be approved by the seller. It is a request to decrease the amount of the invoice to return the goods. Then this request is sent to the supplier. Supplier in response issues a credit note if approved. If credit note is issued by the seller, that means he will not charge that much amount from the original invoice. So seller will record this as a sales returns and customer will record it as a purchase return. This is also called a negative invoice. Now first step is completed, business document is prepared, its business document is credit note. Second step is this will be recorded in the sales returns journal. Now this is the format of sales return journal, just like sales journal. Date, name of the customer who has returned goods, and the amount. In the third step, we have to post this transaction in the concerned T accounts. So when goods are returned by Farhan, 2 T accounts will be involved. Number 1, sales returns will be debited. Now we have debited this transaction in sales returns account and credited in Farhan's T account. Now this transaction is debited in sales returns account, credited in sales account, double entry is completed. When transaction is recorded in 2 different T accounts, double entry is completed. So credit note is the source document, sales journal second step, and recording in 2 different accounts ledgers. Students, you might have noticed that Farhan's account is prepared in sales ledger. There are different books in which T accounts are prepared. Customers T accounts are prepared in sales ledger, while suppliers T accounts are prepared in purchase ledger, and all those accounts which are not of suppliers or customers will be recorded in general ledger. Now if there are some other transactions relating to sales, for example, first transaction, goods sold to Farhan, because that was related to sales, is recorded in sales journal. 5th of November transaction related to sales, recorded in sales journal. 10th, goods sold to Saima, recorded in sales journal. 15, goods sold to Naeem, recorded in sales journal. Similarly, goods returned to us by Farhan, recorded in sales returns journal. Goods returned to us by Amna, recorded in sales return journal. Goods returned to us by Naim, recorded in sales return journal. So similar transactions are recorded in the same journal. All goods sold on credit are recorded in sales journal, and all goods returned to us by the customers are recorded in sales return journal. At the end of the month, journals are totaled, and then these transactions are posted to the concerned T accounts. For example, goods sold on credit was posted to Farhan's account on the debit side and on the sales account in the credit side. So first of all, it was recorded in sales journal, then posted on the debit side of the Farhan's account and on the credit side of the sales account. So double entry is completed. In the second transaction, goods sold to Amna were recorded in sales journal, then posted to debit side of Amna's account and credit side of sales account. And similarly, all credit sales are first of all recorded in sales journal, then posted to debit side on the customer's account and on the credit side on the sales account. Similarly, sales returns are first of all recorded in sales returns journal, then posted on the debit side of sales returns account and on the credit side of customer's account. So double entry is completed and all the transactions of sales returns are similarly posted. Now we will learn how to record checks or cash received from customers. Same procedure will be adopted. Number one, we need a business document, we need a proof of this transaction, then will be recorded in cash book and then will be posted to the concerned ledgers. Students, when a customer pays amount by check, what is the proof with us for the amount received? That is bank statement. We can download this bank statement. We can ask bank to provide this bank statement. This bank statement will show you all receipts and payment through your bank account. So bank statement is a proof that amount has been recorded. So first business document will be bank statement, and then now these transactions will be recorded in the cash book. Farhan paid us his account of 100 by check, deducting 5% cash discount. So 5% of 100 is 5. That means out of 100 we will receive the amount by check 95 and the 5 will be the discount. So this 95 is recorded in the debit side because the amount was received by check. That's why it is recorded on the bank column. If this amount was received by cash, then we had to record it on in the cash column. So this is debit side of the cash book. All amounts received will be recorded on the debit side. If in cash, will be recorded in the cash column. If by check, will be recorded in the bank column. Similarly, all amounts paid will be recorded on the credit side. If paid by cash, will be recorded in the cash column. If paid by check, will be recorded in the bank column. So both transactions are recorded similarly. 50 into 10% is equal to 5. So out of this 50, 5 was the discount allowed and 45 was received, and this 45 was received from Amna and this 5 was recorded as a discount in the bank column. Now because debit entry has been made, this will be posted to this transaction will be posted to Farhan's account, because this is already recorded on the debit side. Now this will be posted to the credit side of Farhan's account. So 95 received from Farhan, cash book. In cash book we have recorded it on the debit side, and we will record it on the credit side of Farhan's account. Similarly, the amount received from Amna was recorded on the credit side. Now both entries are completed. Bank debit, Farhan credit. Bank debit, Amna credit. Double entry is completed. Similarly, students, when all goods sold on credit, all goods returned to us by the customer, and all payments are received, the accounts will look like this. Farhan, Amna, Saima and Naim, all four are our customers, and customers' T accounts are prepared in sales ledger. Similarly, sales and sales returns, because these are not of person's account, that's why these are prepared in general ledger. Now you can see, students, these sales, individual sales, goods sold to Farhan, goods sold to Amna, goods sold to Saima, goods sold to Naim, this all detail you can observe in sales journal. Here all information has already been recorded in the sales journal, so we don't need to repeat this information in the sales account. Instead, we can write just total of the sales journal, and we will not write sales account like this. Just total sales journal, and at the end of the month write credit, total sales for the month. Similarly, all individual entries in the sales return account can also be found in sales returns journal, so we will not write these individual entries. Instead, at the end of the month we will get the total of sales journal, and we will write here. So sales and sales returns journal will be prepared in this manner, not in this manner. So students, in today's lesson we learned business documents, we learned what is an invoice, we learned a debit note, we learned a credit note, a bank statement, then we recorded transactions in journals, and we learned each transaction will be recorded in one of the 6 journals. We recorded transactions in sales journal, in sales return journal, and in cash book. Then we posted these transactions to ledgers. We recorded transactions in T accounts of customers, and customers' T accounts are prepared in sales ledger. And all those T accounts which are not of persons are recorded in general ledger. And you might have noticed we have prepared T accounts of cash in hand at cash at bank in cash book. Now the question arises, cash book is a journal or a ledger? So students, cash book is the only book which is a journal as well as a ledger, because T accounts of cash in hand and cash at bank are prepared. That's why it's a ledger, because date wise transactions of cash and bank and discount allowed and discount received are recorded in cash book. That's why it's a journal as well. So for discounts it is a journal, for cash in hand and cash at bank it's a ledger. Students, in the upcoming videos we will try to understand purchase journal, purchase return journal, general ledger, and we will try to learn control accounts as well. Thank you very much. Allah Hafiz.